Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started. So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains. But not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank. But all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. Your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
You've been on the fence to come to PMC Money Take. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool.
It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Stephen, Shona, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. There's a lot of people that I talk to, their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started at $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event. You don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 9:30, 10:30 Eastern Standard Time. Going live!
All right, so here we are. Can you hear me okay?
What's up? What's up?
All
Yes,
right. Back at it. WTF in the house. We are going live again where we're going to rant, we're going to rave, and we might, well, maybe not, but we might argue. Hey, it has happened. Last week was a pretty interesting one, but today we're going to switch it up. We're going to go back to the basics, okay? Like Michael Jordan, every time he put his foot on the court, he went back to the basics, dribbling, footwork. We're going to go back to the basics, and that is the money aspects of the news. What is happening out there in the economy, in the world, in the U.S., and how does that affect your dollars, your 401k assets, your money in the brokerage accounts? We're going to really focus on oil today. We're going to talk about the roller coaster ride going on in oil. We're going to talk about NVIDIA and OpenAI and what they're doing and how they're trying to raise another $250 billion. Yes, that's with a B. We're going to talk about Trump and his view of Warsh and what Warsh, the new Fed chair, is doing. And will Warsh comply in lower rates or hold them steady, which the markets and the economists are saying he's going to hold them steady. We're also going to talk about some inflation. If we look at inflation and we really dissect it, we're going to talk about what that means if you uncover the truth behind the inflation numbers that you're seeing. And then we're going to just talk about how much does oil and the price of a barrel of oil affect inflation, because that's a big thing that's been happening. You know, you hear that inflation's moving up. It's moving up only because of oil and food prices. So we're going to dissect that. We're going to talk about supply chain rebuilding. We're going to talk about the US dollar. Is it going to maintain its status as the reserve currency, or what could happen in the future with that? And are there better options? These are all things we're going to hit. Stephen, what else you got on the agenda for today?
Yeah. Hey, what's up? Good morning, guys. I mean, you mentioned Michael Jordan. So I got to say, in my opinion, the GOAT. A lot of people say LeBron James, you know, maybe the better player. So just little hot news coming in. LeBron made his move, decided he's going to Philadelphia to play for the 76ers. So see what happens with that. There's also a lot of chatter that he's going to live in New York City in a helicopter over to Philly for practices and games. So kind of an interesting development there. But you know me, always talking sports. It's baseball season, so kind of boring. So when these stories pop up, it's kind of fun. But mentioning New York City, kind of a hot topic that came up last week, but we got to talk about it because just this week they released a list of thousands of homes that they want to with people's names and addresses, which why did they do that? For a tax, Chris? Maybe we can get into that a little bit, but any apartment or condo over $1 million, any single family home over $5 million, if it's a second home, there's going to be a special tax just on those properties. And then the government-owned grocery stores that they're offering 30% off staple groceries. How's that going to work out for the local New York City economy, for the other small grocery stores and bodegas in the city? There's already lawsuits coming out against that, and brings up the broader picture when it comes to money and how this country functions with capitalism. Well, the midterms are coming up in just a few months, and the DSA, Democrat Socialists of America, seem to be winning primaries all over the country. So which way is this country headed? But like you said, Chris, oil is on a yo-yo. Inflation is doing all kinds of crazy things. There's a lot of smoke and mirrors out there. The technology sector, a lot of earnings reports coming up. Remember, Chris, those top like 7 to 10 tech stocks really carried the stock market over the last several years. But with AI and everything going on, is that house of cards getting ready to fall? And what's the broader implication there? So like I said, a lot to get into today. So let's hit it, man.
Let's dive in. We'll start with the economy. Well, let's just talk about how the economy is doing. So it depends on what you look at. You know, if you're watching the news channels, Fox, CNBC, CNN, you're going to get one take of the economy, and it's usually very much driven toward the market aspects. Oh, stocks are doing great. Stephen, you mentioned that about the Mag 7, or shall we call it the Mag 10, and how they've kept the S&P 500 elevated and the NASDAQ elevated because they are tech stocks. So that drives the NASDAQ up, but they're also a major component of the S&P 500. So when you really are looking at the markets, I don't think you're really getting a strong view. And then you got the Dow Jones, okay, which is very similar, but, you know, just there you go. I mean, you got the NASDAQ, you got the S&P 500. Now we're seeing some down numbers right there, but we're going to talk about that. That's what's going on in Iran. We'll hit that when we get to world. But all of these things really tell a specific story. And that is, it's funny. Let me kind of deviate a little bit. I often will go on social media and I'll post, be careful. There's a recession looming. There's, a softening in the economy. And I get beat up. Stephen, I don't know if you have these discussions with people, but people are like, oh, the markets are doing good. How much money did you? I had one guy, he's a friend of mine, so I didn't take any harm to this, but he's just like, Chris, no disrespect, but you've been wrong for the last couple of years, to which he is 100% right. But am I really wrong? Really, that's in the eye of the beholder. So I just want to be prepared when this event happens, and I want to protect and help prepare as many other people as I can. So when this event happens, then you're ready and you benefit. Hence why I talk so much about treasury bonds. And I talk about the inverse relationship between interest rates and the price of the bonds, which has not materialized, but that still keeps creating this massive buying opportunity in treasuries. I keep talking about this, but did I, then the flip side of that is, what did I give up to take the safe path, right? That's to be determined. And probably the answer, a lot. But here's the thing I know, and here's the thing I urge you to really pay attention when you're watching the economic data, when you're looking at, we're going to hit real estate, because real estate's really right now a hot topic to talk about. But when you're looking at all this, you got to see that there's weakness. You have to. I mean, there's so many things that point to the economy weakening, to job losses increasing, to more and more people being unemployed and having a harder time finding new jobs. There is just not as many jobs out there as there was. Okay, we're not in the COVID era anymore. Things are levelizing and the economy is softening, and this stuff over in Iran is not helping. But you got to prepare yourself a little bit for this, and really in the eye of the beholder, to each their own. Everybody's right. I want the safe path. Warren Buffett's doing the safe path. Burry's doing the safe path. And then, you got a lot of the other investors who maybe know, what they know, taking the risky path. And what I know, Stephen, and you were an advisor as well, is the market literally could shed 30% in a matter of 1 week or less. It can happen even faster, like it did, what was that? I'm trying to think of that famous Monday where just the Black Friday or Black Monday when it just dropped. I'm confusing the names in the 80s, but that can happen. You can give away all of your gains in a matter of a week. And everybody's like, oh, I'll just make sure I switch and I adjust. Oh, really? Your advisor is going to make sure? Because I'm pretty sure they're out golfing or doing something else. Are they really going to reallocate your portfolio? For those of you that have AI or you're using stop loss, yeah, maybe you're protected, but I just have a hard time believing that any regular retail investor is going to have time or the sophistication to reallocate their portfolios in time to not shed the gains that they've made. Stephen, what's your take on this?
Yeah, and it was Black. I just looked it up real fast. Black Monday. That was back on October 19th, 1987 was the last one. Prior to that, we had one October 28th, 1929, where there's a 13% drop. But the one in 87 was a 23% drop in a single day.
In one day.
Yeah, so it can happen, and it can happen fast. The interesting thing about everything you just said, Chris, is it's not just you. I actually had a really good conversation yesterday on the phone with a high-level advisor, only works with very high net worth individuals and business owners. He lives up in Connecticut. He told me the majority of his clients are high-end stockbrokers and Wall Street guys and people that are in the markets. And he says these guys keep coming to him. He's their advisor, and they keep coming to him, and they're like, listen, the market's going to crash. The market's going to crash. The market's going to crash. We want to be in safe places. We want to be in cash. We need it to be here and there. And he's like, I agree. But he also said to me, he goes, Stephen, it's just not happening. He goes, the market just keeps going. So it's not just you. It's not just me talking about it. Like these Wall Street guys, they're also thinking the same thing while they continue to invest and trade your money in index, in different funds, but that's a whole nother story. But anyway, so I bring this up because he actually reached out, and the reason he reached out, Chris, was because he's looking for a place for all these high level, all these guys with millions of dollars in cash. He's like, I want them to put their money in the whole life policy. Mm-hmm. He's like, do infinite banking with it because they get the guaranteed returns. It's safe. Everything we talk about. And I know today at 1 p.m. Eastern, we're going to go into the foundations of the infinite banking concept. So if you want to learn what these high level advisors are doing, what these high level Wall Street guys are doing, and you can do exactly the same. You don't have to be a high net worth individual to do the infinite banking concept. Make sure you join us at 1 p.m. Eastern. But I just thought that was a really interesting conversation I had yesterday that you just brought up, Chris, that other people are thinking the same way.
Yeah, listen, I have a podcast called Money School Elite. In that podcast, I interview only high net worth individuals. The podcast is literally shifted and now is literally geared for the top 1%. So I bring on people like the Hilton family office guy, okay, who runs the Hilton family office. I bring on really big advisors managing billions of dollars. And listen, like they're all saying the same thing. But here's the thing. If you're a sophisticated investor, if you're a trader like the ones you're mentioning, Stephen, like I get it. Like you can trade this market right now and make a ton. And they are. I mean, all the traders are trading oil right now. I mean, and they're crushing it. And the markets keep going higher and tech keeps going higher. But the whole tech thing is kind of like what we explained back a while ago. Take one of those the extensions. What are they called, Stephen? Like where you got you can plug in like 6 different things, but it only plugs into the wall once. What is that called? An outlet extension, power extension, whatever. Like we all know what they are, right? You plug it into the wall once, and then you can plug like 6 other things into the extension. Power strip. I don't know why I can't just remember these simple terminologies. The power strip. Remember right now what's happening with NVIDIA, with Microsoft, with OpenAI, with Claude and Anthropic and all these other companies is that power strip. You're just taking the main power cord. You're not plugging it into the main energy source, which is the wall. You just plug it into one of the outlets and that's supposed to give you power. Obviously, you know that you'd get no power, but that's what's happening in this whole tech space. Every one of those companies are feeding the other. They're just transferring money. It's like this, it's you just keep passing it around until somebody's going to be left with the hot potato. And you know who that's going to be, Stephen? Who's going to be left with the hot potato? It ain't going to be NVIDIA or OpenAI or Anthropic. Who's going to be the one? You and everyone watching the show. And yeah, that's going to be the person hanging on to it. So let's get into some tangible stuff here that I have written down. I want to talk oil, because it is the basis of the economy and what's happening right now. So oil is an interesting one. There you go. Thank you. That's exactly the picture I was looking for. That's what's going on in tech right there if you're looking at it. The power strip. Thanks, Morgan. Yeah, Eve even said surge protector. I like that. Yeah, because now they are surge protectors. But let's kind of talk a little bit about oil. So I was super excited. Earlier this week, matter of fact, I think it was like 2 days ago, Monday, they came out, the markets were rallying because oil slid below $90 because there was no hostility. There was kind of peace talks or whatever you want to call it. But today, I guess Iran lobbed some ballistic missiles, a surprise attack on some U.S. bases in the Middle East. So now oil's up 6%. Like that's great for traders, but how many of you want to play that roller coaster ride? And if you do, I mean, I was looking through and I was looking at some of the things about oil. So let's talk a little deeper about oil and make this more, tactical for you. So like right now, if you look at inflation is the gauge of that the Fed is really looking at. And I ran these numbers, which I found really interesting. Inflation's sitting at 3.5% today, which obviously, is high. It's higher than where they want it. The Fed wants it, but it's down from 4.2 when the war started, which was earlier this year. So we went from 4.2 to 3.5. So inflation's coming down, but it's still elevated. But check this out. This is interesting, Stephen, and I don't even know if you know this. If you remove oil and the volatility, that oil has on the markets and has on inflation, and you remove food, which is directly affected by oil, just like everything else, but food is the first runner up that gets affected. If you take oil and food out, inflation's at 2.6%. Like drastic difference from 3.5 or 4.2, right? So when you tell the story, oil is what's playing this card in this Iran war, which obviously, one thing Trump was very wrong about is this was going to be quick. I think we all knew that because back in the Middle East war, in the 90s, when Bush went in, like Iraq, this is going to be easy. One week, we're out of there. And it never ended. So are we seeing the likes of that with this Iran. And the other interesting thing, study Iran. Iran's never been conquered. It's never been beat. Like they get attacked all the time. They've never been beat. So they're a pretty resilient son of a bitch. So if that's the case, then why can't we just come to a conclusion and get rid of all this oil volatility and everything else? But the other thing, here's the opportunity for all of you. If you think that, let's say we sign a peace deal today and oil drops, do you think the problem's solved? It's not. There's a massive, massive opportunity right now in looking at the infrastructure. And I've got a whole story on this right here. And it's really an income play. But when you look at this whole story, it's talking about, a pilot. Let me give you this story as it's said in this article. It's talking about a pilot. All pilots know the difference between turbulence and structural problems. Now, I don't think passengers of airplanes understand this. We understand turbulence, right? And we get nervous. How many of you get nervous? You can put turbulence in the chat. How many of you get really nervous when you hit heavy turbulence? I mean, I definitely do, and I fly all the time. I'm okay with mild turbulence, but when you get in that real heavy stuff, Stephen, remember when we were flying out to Aspen, me and Shauna, and we got stuck in that storm? That was heavy turbulence. But the thing is, turbulence is loud. You hear it. It's uncomfortable. You feel it. It rattles the cabin. Things move. Your drink falls. People throw up. I mean, it just happens. So when it's in heavy turbulence. But here's the thing. The pilots are just sitting up there sipping their Mai Tais, or, well, hopefully not, sipping their coffees. And they know that aircraft is built to withstand that turbulence. So they're not worried. But then when you talk about a structural problem in the plane, and we've seen this over the last couple of years, lots of issues with airplanes. Okay, a structural problem is quieter or has no sound at all. It's far more dangerous because it doesn't fix itself. You don't fly the plane out of a structural problem. So when you look at that, that's an exact correlation to the oil market right now. What you've got to look at is all this volatility is because of this conflict or war, or whatever you want to call it, going on in Iran. But because of the war and because of all the bombings and everything else on both sides, including Iran hitting Saudi and, all the different countries that they're bombing and the oil they're bombing, there's a major structural issue in this right now. The structural issue really comes down to pipeline infrastructure, refining capacity, which is what we do not have here in the United States. We have the ability to produce lots of crude, but we can't refine it. So we have to ship it out for a refinery. But now all the refineries are getting hit in getting banged up. So it's really affecting the structural side. So global production and refining capacity will take months or years to recover. So just because they sign a peace deal, oil doesn't just come back, because we don't have those refineries. We don't have that pipeline that we once did globally, because oil isn't just a US problem. This is a global problem. So where's the opportunity in that? Well, I don't know. You could invest in oil. I think that's probably the biggest thing to talk about. And, I do a lot with Eckerd. I'm not giving a commercial for them, but I've had good success with them. But here's why I invest in oil. Oil's speculative. You can make a lot of money or you can lose a lot of money. ExxonMobil might be one of the ones I would say that you probably, if you were like, what should I invest in with oil? Exxon's probably one of the better ones to look at because they've been around forever. They pay a really strong dividend. So if you're hunting income plays, then Exxon's probably the choice. But when you look at oil investments in things like Eckerd, I pulled this up, Stephen. I thought this was interesting. It can be a major tax play. How many of you like paying the government more in taxes? Anyone? Nobody, right? But a bunch of you, I guarantee, like paying the government less or paying the IRS less in taxes. So pay attention. This isn't for everybody. I do want to preface, I'm not giving, investment advice. I'm not telling you what to do. I'm simply telling you the facts. And you can look this up for yourself about why oil right now, I'm going to talk specifically about oil today, could be a really good play because of the tax advantages. Check these out. And I just looked it up. This is just a summary. And actually, Stephen, maybe I should just share my screen. Let's see here. Share screen. Here we go. All right. So can you guys see that? I can't blow it up, I don't think, but let's just focus right here. These are just oil. If you invest in oil, and this is what I did with Eckerd, okay, here are the intangible drilling costs. Okay, so if you put $100 grand in simple math, if you put $100 grand into oil, 65 to 80% of that, or basically 100% upfront write-off against your active W-2 income. Like right there. I mean, that's incentive. So if you're looking at these kind of oil investments, you know they're speculative, you know they have high risk, but you know you're going to get this massive advantage, okay, from a tax standpoint. Like that's kind of like getting a return. If you don't pay the government 40% because you saved 40% or you saved on taxes by these deductibilities, like sign me up. Then there's the tangible drilling cost that can account for another 25 to 35% through the bonus depreciation, the 179 program. And then the depletion allowance. And I remember Eckerd telling me about this, but I haven't witnessed this yet because, you know, in, let's see, 2025 is when I did my investment into the oil. So 2025 taxes are still on extension, but when they're done, I'll take these deductions. And many of you will too, because I'm sure you all have gotten into this. But this is the one I haven't yet realized because my well, which is completed, capped, and everything, doesn't start producing until October. But when I start getting income from the production of that well, I didn't know this, but 15% of the gross revenue is 100% tax-free for the life of the well. Shut the front door. I had no idea about that, but like that's even better. So what I'm trying to say is oil right now is the hot topic. It's the hot topic with traders because it's so volatile. You can trade the volatility. You can trade options on it. You know, Exxon's all over the news. Like I'm not the first to tell you about Exxon, but right now I think they just increased, if I'm not mistaken, I thought I saw something that they just increased the dividend on Exxon. Let's see. I'm not going to find it, but I'll look for it, Stephen, when you're talking. I'm pretty sure they just increased that. But these are compelling reasons and compelling things that could help all of you. Stephen, what's your take on oil, tax advantages of oil, and all this stuff in right now as it sits?
You know, I mean, it's like anything. It's kind of being educated and putting it into the overall plan is all. I mean, like you said, you nailed it. I mean, there's advantages. There's ways to, you know, use oil investing for regular income, monthly income. You can use it for speculation and growth over the long term. There's a lot of tax advantages if you buy it the right way. And I know there's some great companies out there that do a great job, have a long history of it. But like any investment, just kind of understand what you're doing and why and the strategy. And there's something for everybody. But because of that, it's why so many people do get involved in different types of oil projects and investments. And I agree with you. It's a smart place to be in the right scenarios for sure. I did look up the dividend. Exxon pays an annual dividend of $4.12 per share, dollar quarterly, reflecting a 4% hike from its prior 99-cent rate. So the forward dividend yield is approximately 2.6 to 2.7, backed by a 43-year streak of consecutive annual dividend increases. So they've been increasing their dividends for 43 years straight. That's pretty impressive, Chris.
Not too bad. That's kind of a steady Eddie to have in any portfolio. Again, not giving investment advice, but you can't deviate from what Stephen just said. So I want to also preface, and we used to do this a lot. We fell off it for a little while. We had an awesome host and guest, James, who came on the show, brought a whole different perspective. James is off doing other things, amicable, all good, still friends, everything on the up and up. But that's why we're kind of going back to the financials. And this is just one of those economic newsletters that I subscribe to. This is Jim Rickards. He's a bit of a gold bug, so you got to kind of discount that. Stephen, you love gold, but this is where a lot of this information comes from. This is not stuff that we're pulling from CNBC or Fox. This is stuff coming from an economic newsletter like that, at least the stuff we've talked about so far. So Stephen, where should we go from here? Because I kind of beat up the economy talk, but one thing, sorry, I forgot one really important thing. This is important. So this is kind of a rule of thumb. And I just found this out, and this is interesting because when you're listening to Warsh, you're listening to what the Fed's going to do. This is a really strong thing to understand. For every $10 that the barrel of oil increases, so if a barrel of oil goes up $10, that adds 20 basis points to inflation. So when you're thinking about it, if oil goes up $20, you're adding 40 basis points to inflation. So if inflation's at 3.5 and we add $10 to oil, we're now at 3.7. That's a simple way to look at it. I didn't know that, but I thought that was interesting. And that was all in this fourth discipline of income investing. But I think we should switch gears or take some questions from the audience on oil.
Yeah, we could definitely do that. And it does roll right into the next topic, which is the new Federal Reserve Chair, Warsh, and what he's going to do. I mean, he has a lot of pressure on him right now from the Trump administration, really pushing him to lower rates. Lots come out on that, so we can get that. But do we have any questions before we dive into that? Any comments on oil?
Yeah, because we're gonna roll right into USA here.
My fellow Americans.
So you know the thing. I do like, Chris, how you said gold was a negative against the guy. Come on, man. Precious metals are
not a negative.
The OG, baby, the OG.
I don't mean that. I love precious metals, but what I mean is he is definitely a bit of a gold bug. Like he pretty much says gold is the almighty, invest in gold. And I'm not saying that's a bad thing. Actually, that would have been a really good thing if you listen to Rickards, in the last couple of years here. But, it's just every economist has like their deviation. Like I was reading some Harry Dent stuff today. He's still, on the big bust, right? We're going to see the biggest economic crash the country has ever seen. He's still on that. And I take a little bit from all of them, right? So you gotta, because if you go with Rickards, you got kind of a one-sided view because he swings, to the gold side. If you go over to Harry Dent, he's more treasuries and playing this big bubble, burst. He's kind of like looking at Burry. And then you got other ones that are kind of more in the middle, Grantham and different people like that. They're not economists, but they're more, big institutional investors. And if you look at all of them, you can really piece together where we're at and where we're going. And the surprise amongst all of them that the markets are being as resilient as they are. I think there's some speculation or some manipulation going on behind the scenes. But let's bring this over to the Fed. Stephen, do you want to kick this one off?
Yeah, definitely. All right, cool. So just a couple stories on this, and then we can talk about it. So this came out Monday, updated yesterday afternoon. Trump backs fantastic Warsh. Trump loves to build people up, especially when he wants a favor of them. And so he's calling Kevin Warsh fantastic while calling for lower rates and citing bad intentions of other Federal Reserve officials. So calls him fantastic, but wasn't as complimentary to the central bank leader fellow officials. Some Fed policymakers are very political and perhaps have bad intentions. Trump told reporters aboard Air Force One. The comments come 2 days before the Fed's next interest rate decision. So looks like, I guess it's coming up later today, Chris?
Later today, yeah. Now they're saying he's going to hold rates. And just so you all know, the Dow futures right now, down 505, almost a full percentage point down. Ouch.
Yeah, so they're saying likely to hold interest rates steady. What that means for consumers. Most Americans' direction of monetary policy can significantly shape household budgets. Here's how the central bank's next moves could impact your finances. So you could probably explain that better than this article, Chris. But.
Yeah, so I mean, the big thing here that I pull out of this story, and this is just my take on it, is, Trump backed Warsh pretty heavily, right? And the whole thing, we all know Trump wants rates to come down because that's going to be good for the economy, and that's probably going to be good for him in midterms and in the Republican Party. So when you really think about it, it's a bit of a fixed game. Like he wants rates to come down because he knows that's going to give stimulus to the economy, which it would. It makes money cheaper. There would be, if they were to bring rates down, it would be a massive push on the economy in a good way, and it would really help real estate investors. But I really think right now what the markets and what everybody is looking for is just a direction. Are rates going to come down or are rates going to go up? But Trump backed Warsh, even though and on this whole thing they were all calling out lower interest rates, but inflation being higher because of this oil is kind of kept the Fed at bay. And now they're talking about yet another flat, right? Listen, I'd almost prefer an increase in interest rates for God's sake. At least then we know what direction it's going and we can make moves, we can get prepped and everything. But by holding them flat, you're basically telling the entire market, you don't know what the fuck is coming next. You're like, oh, well, we don't know, so we're just going to hold it. I don't know. I'm not an economist. I'm not, somebody who studies the stuff, but I just know from the street what people want is a direction. And it doesn't look as though we're going to get that. So the Fed's likely to hold rates again. In the day, that's probably exactly what's going to happen. I'm sure Trump's pretty upset by it, but it isn't his decision, which is kind of nice to know that Warsh isn't just a puppet. He's kind of going to do what he thinks is best. But I got to sometimes believe how much influence is Warsh getting because of the rest of the Fed,
Yeah, definitely. And just a little bit about Warsh, just because, it's kind of important, in my opinion, to understand kind of who these people are. But, he's the 17th chair of the Federal Reserve. He's previously worked with the White House economic advisors and was a Morgan Stanley executive, born 1970 in Albany, New York, bachelor's degree from Stanford University and law degree from Harvard Law School. So pretty smart guy. Worked for Morgan Stanley from 95 to 2002 as VP and executive director of mergers and acquisitions, which is a very detailed and finance oriented position for sure. So he definitely understands business and how money works. Served as special assistant to the president of economic policy and executive secretary of the NEC under President George Bush from 02 to 06. He was appointed as a member of the Federal Reserve Board of Governors in 06 at age of 35, becoming the youngest governor in its history at the time. Served through the 2011 and acted as a key financial intermediary during the 2008 global financial crisis. Worked at Stanford University's Hoover Institution and Graduate School of Business from 2011 to this year. Nominated by President Trump in May of 2022 to be the Federal Reserve Chair. He, just a little bit more, he played a pivotal role in the 2008 financial crisis. And his current approach to the federal chair reflects the distinct hawkish, data-driven and minimalist communication philosophy. So he was part of the four musketeers of the 08 financial crisis rebound, one of the elite core group of policymakers alongside Bernanke, Timothy Geithner, and Donald Cohn, who spearheaded the central bank's emergency responses.
So in other words, you're saying he's a pretty smart and qualified guy, right?
Pretty smart and qualified guy. Yeah, I mean, he and just a little bit about his policy views, and we'll move on. But the no guidance experiment, Warsh believes that excessive central bank signaling distorts market behavior. He stripped back forward guidance on interest rates, issuing bare bones official statements to force markets to interpret raw economic data. So he's trying to get the Federal Reserve out of the market's decisions, which I think is great, Chris. But that kind of goes against Trump's whole view on everything.
No, it goes against it, which is kind of where the whole thing, Trump wants lower rates. Warsh was kind of backed by Trump and was pro lower rates. And now here we're seeing just a little bit of a different stance, which is probably good because he's just going off of, like you just read, the economic data, the actual stripped down data, which I think is really the way to do it.
And the last two pieces here, just on inflation and balance sheets, because it's a big piece of what is going on with this country right now with the debt, the federal debt, and just continues to increase. I mean, I think our deficit's at like 2 billion plus right now. I mean, it's just, it's ever expanding. So he does have a hawkish stance on inflation. So he's historically an inflation hawk, maintains that inflation is a policy choice, not a supply shock. The members of our committee have no tolerance for persistently elevated inflation. So he really wants to get inflation down and under control, which is why he's not willing to drop rates, prematurely or ahead of when he's ready. Aggressive balance sheet. He advocates for retracing the Fed's steps during economic normalcy by aggressively shrinking its $6.7 trillion balance sheet via quantitative tightening, which kind of also goes against what everybody wants right now.
It goes against what everybody wants.
Encouraging dissension. He actively rejects a choreographed, consensus-driven federal culture, famously advocating for a good family fight where officials debate policies openly without rehearsed scripts. So he's bringing a little of reality and a little bit of realness to the Federal Reserve, which we talked about this about a year ago when they first started talking about him becoming the next chair before everything was and we talked about that, Chris, how we think it was a good thing, a good decision. And now it's where the rubber meets the road. We'll see, what he does and how that affects the economy moving forward. So.
Well, I'd like to give a shout out to all of our listeners for this show. We got a whole bunch of people coming in, commenting up here from Instagram. We got a whole bunch of people coming in from YouTube. Thanks for joining us, and also thanks for being a subscriber of my YouTube channel at the Chris Naugle, because you wouldn't get here if you weren't a subscriber. So thank you all for that. But I want to hit some of these comments, and I think they're really good ones. Morgan was saying I'm a Jim Rickards subscriber, but one of the things I think that I really liked here is not just that some folks like strategic intelligence and Jim Rickards' view, but Jim Rickards did write a bunch of books. He's got a lot of books, and I haven't read them all, but I've read a bunch of them on the dollar and all sorts of stuff. They're really informational. I mean, he's not just slapping a bunch of stuff down on paper. He's got some serious data that goes into them. And one thing, just back to gold with you, Stephen, Mark Perry, who's been a longtime follower, said it's the only real money that's left. And how can you disagree with that? Because it really is. I mean, fiat money. I mean, we're going to hit on that when we get to WTF, but there's been talks about the US dollar not being the reserve currency in a decade from now. But the problem with that argument, or that kind of thesis, is there is no substitute. There's no other currency, not China's currency, definitely not the euro, not Japan, not Russia, no other currency, none can right now compete with the dollar. So if the dollar is so bad, the dollar is significantly better than any other currency. And then the thought was, with the BRICS, was to combine all of these other currencies to make one stronger. That's what the euro kind of was. And could that work? I suppose, but it's going to take a long time. And there just is no path through to find what is the most viable currency to be the reserve currency outside of the dollar. So that argument, although I think there's merit to it, it's a hard one to really predict, because there's what's next? I don't know. I mean, I hate to look at history, and I hate to look at some of the videos out there that talk about what's next is another world war. I hate to hear that. But what do you got here, Stephen?
I just pulling up charts while you're talking, just precious metals.
It's pulled back, but I mean, depending on where you bought it, I mean, it's only pulled back a little in the grand scheme of what it's gone up.
Yeah, I mean, if you look at the last 5 years, still way up. I mean, to the comment in the chat box, yeah, I mean, in the 70s when they set at $35 minimum wage, it would have taken minimum wage $7,000 to buy the same amount of gold in today as in 1972. So if you look at gold price today at around $4,000 an ounce, I mean, it seems to still have some room to run there if you're looking at comparisons, but it's hard to look at these days, the way that just we spend and debts and deficits and everything else. But yeah, everything really popped last year, and it's kind of figuring out where it's going. Bitcoin continues to kind of do the same.
Yeah, it's bouncing around. Bitcoin, XRP, all of the cryptos are just bouncing.
Yeah.
But let's keep going with some of these before we move on to the next topic. This one is a really good one. Chris Ash always has great comments coming in. He said lower rates will help the government refinance debt. And that's probably one of the big reasons Trump is pushing for lower rates, because lower rates make it much, much easier for the government to pay down debt. It reduces their interest on their debt as well. So, that's a really big one. And that's in line with what the Fed was saying, where they're trying to, reduce that balance sheet and get rid of some of that. Let's see. And I agree also here, Trump is trying to create an economic boom in America that is coupled with financial repression, which you're seeing right now. It would help to get the U.S. debt and GDP ratio gradually lowered over time. I agree with that. And then Jim Collins, I've talked to Jim in person at Money Tank. Jim said, I voted for Trump 3 times and I regret my vote. To that, which I would say to each their own, but who else would you have voted for? So if the election was over again and you regret your vote, so who would you have voted for? Would you have, voted for Kamala? Would you have went for somebody else? I mean, that's always the question I ask. Is I just don't feel like we've had a very good selection of, people to pick from. I don't know. It's a very difficult thing to look at when you look at that. And midterms are going to be quite interesting. And the thing about midterms, Stephen, and I think it's always like this, you just don't hear much about them, right? They're so vital and important, but you just, as a voter, as just a citizen, you don't really hear much about midterms, but they have a massive effect on every single thing we do. Let's see, just anything else here? Way too much debt in the world, right? Which, to what Chris Ash is saying, there's too much debt in the world. you don't want more world wars, but like those have been the things that we've led to in the past. I hope to God we don't go there again. That's just an awful, awful thing. But boy, there's a lot of conflicts out there. Hard to not see it. All right, Stephen, what should we move on? You want to move on to we hit the US dollar. Let's move over, Stephen, and talk a little bit about New York City. Now, I know last week that got us in a lot of problems, but I don't think you're going to come rushing into my office yelling at me if we talk about Mondami a little bit, are we? Are you going to get mad at me?
No, I'm not going to get mad.
All right. Now, everybody I think on here already knows Mondami's my favorite person. Not like I think he's the worst thing that's ever happened to New York City, but New York City is just a piece of shit right now, and it has been for quite some time, no matter who's the mayor. But talk a little bit about, because I looked it up here. You know, there's major anxiety going on right now in New York City, and there's literally huge pushback, massive lawsuits, big debates over these fiscal policies, and one of them is this tax on the luxury second homes. Now, I don't know. I mean, they got a deficit. They need to fill it. So he's talking about ways to do that. His ways are a bit strange, but can you just fill us in? I know you've been studying this probably just as much as I have, maybe even more. Like, what is he really trying to do? Is he trying to push all the wealthy people out of New York City? That's what it appears to be.
It's communism, Chris. I mean, communism ends with the seizure of private property. And we luckily do have a constitution in this country that stops him from directly doing that. But he can create as much mayhem. He can put out as many crazy policies as he wants to essentially do the same thing as seizing that property, because he knows if he can call these people out. I mean, why do you think he publicly posted a list of every property owner's name and address?
Well, he singled out that billionaire hedge fund manager, Ken Griffin.
He did that a couple of weeks ago. Yeah, I mean, that's what communists do, is they want to eat the rich. Remember when AOC wore that dress a few years back, eat the rich? I mean, this is what they do. They want to eat the rich. They want the people out. They want to create change. And the only way they can know how to do that is to lead the regular people into destroying the entire system. I mean, if all of these very, very wealthy people say, listen, we're not willing to pay these ridiculous taxes. We invested in these properties for a reason. We like to visit New York City. We're not willing to do it. They're going to sell. What does a massive sale of all these properties lead to? Home prices dropping, which maybe that's the short-term goal, but in the long term, nothing good comes of any of that. In the long term, the tax base goes away. I mean, if people sell these properties and prices go down, taxes actually that the city gets goes down. I mean, it's all connected. And so I really don't think he cares about wanting to really tax the people. I don't think it has anything to do with the deficit. I really truly believe it's what he believes in as a communist person, and this is his way of trying to do that. And the other large news was not only housing but also the grocery stores, that he talked about. But staying with the housing stuff, $1 million. So what it came out is any second homes, any apartments or condos, $1 million or more, or any single family homes, $5 million or more. And these are the ones he posts. Now, the problem also with this list that he posted.
Can you repeat that one more time? Let's look at this from the standpoint of New York City. So say those numbers again. So
$1 million apartment.
Is there any apartments that are less than $1 million?
Not many. I think
I'm just saying, like if this is just for the rich and the billionaires that we're targeting, and we put the $1 million on this second home thing, like I don't know of any property. And folks, if any of you are from New York City, I know Maureen's on here. She's very familiar with pricing in New York City, and I know we've got a lot of other folks from New York City. Is there apartment buildings that literally are less than $1 million? Hell, I don't even know if we have many of those here in Buffalo, let alone New York City.
Taxing billionaires comes at you real quick.
Okay, so anyway, so that's the $1 million. So that doesn't seem like that's a millionaire or billionaire tax. That seems like that's just let's tax every second property that investors own. But keep going.
Well, the crazy thing is he posted this list of these tens of thousands of properties publicly, names, addresses, just doxing people. I mean, when he did that in front of Ken Griffin's house, what happened? All the crazy protesters, all the crazy left-wing nuts, all the paid propagandists, they all attacked the house. Like they went at it. They started going in front of it. And so he does this because he wants that to happen. He wants the mayhem. He wants his followers, his lackeys, his crazy people to go out there and cause problems. And they want to drive these people out of the city. So the crazy thing about the list he posted, though, is that a lot of the people on there are coming out and be like, listen, I lived in this house 365 days a year for the last 30 years of my life. A Democrat House of the Representatives, I forget the guy's name, but he's like, he came out and he's like, listen, you have me on this list. I'm not a millionaire. I serve in Congress. I've lived here for 34 years. What the hell am I doing on this list of houses that are supposed to be over 5 million? That my house is not worth 5 million. And it's not a second home. I've lived here forever. And there's story after story after story after story of this happening. People coming out being like, this list isn't even right. So it's just nonsense. It's crazy to see in this country. And it has to stop because, like Mark said, it doesn't stop with property. That's just the easiest, lowest hanging fruit right now. But it goes into all assets. It's just nuts to me, Chris. And the ramifications for real estate. Oh, and the rent freezes. I mean, the rent freezes just came out last week too. So not only are they taxing people, now they have these rent freezes. I mean, have you ever studied what rent freezes do to a
Well, if they're going to freeze rent, why wouldn't they freeze property tax increases? Why wouldn't they freeze utility increases? Like if you're going to freeze rents and you're going to cut the investor off at the knee and say, okay, you can't increase rents. And you know, that may be a decent thing for the renters, right? Which it provides them some support levels for, you know, the rents, which have gotten out of control. But there's always got to be a give take. You can't freeze rents and then tell the investors or the property owners that you're going to raise their property tax. Like now all of a sudden, like what's going to happen? They're just going to fire sale the properties. They're going to move out of New York City, which is already happening. I'm reading like there's been a massive flow of billionaires and corporations moving out of New York City. Like it's right there in the news. Like these aggressive tax threats are driving the wealth out of New York City, which is already New York City's got financial problems as a city, just like California has financial problems. Well, it's the same story for both sides, you know, each coast, like New York City and LA have the same problem. They have major budget deficits and gaps. And yes, when the government was printing money and just handing it out to these states, no problem, you know, but when the government isn't printing money, handing it out, they got to figure things out. And this is, I guess, the way they're trying to do that.
Yeah.
I mean, you saw, remember back a while ago, we were talking about California when Newsom was talking about crazy things, not this crazy, but things similar. And then you saw, and I'll just pick on Elon, you know, Elon he's like, all right, I'm out of here. And he just moved his factories to Texas. I don't know. Wild.
Yeah, and it's like anything in government. Like they make it sound so great with the headline, like rent freezes. Oh, that's awesome for people. Like rents are so high. These greedy landlords keep raising rents. You know, it has nothing to do with increased costs on their side, increased property taxes, increased insurance, increased cost of repairs and maintenance and goods and everything else. But, you can't charge you more rent. That's a great thing for the people, right? Or, you know, hey, these millionaires that have these second homes, they don't even live in New York. Like, let's just tax them more. They got the money. They got second homes. They can afford it. It sounds great, but there's so many downhill ramifications and and just, it's just terrible for what actually happens. And then not only that, but he's going after businesses. So local grocery stores, bodegas, corner markets. So they just came out this week and said, okay, I'm going to open 5 city-owned grocery stores. And every single month, we're going to set the price of the staple goods. And it includes, there's like 100 different goods. It's like chicken and meats and poultry and eggs and you know, milk and bread and, you know, all the staples. There's 100 or so different things, but 30%, whatever the going rate is in the city, they're going to offer it at these stores for 30% less. And that price is going to maintain for 1 month.
But the margins on food are like
1 to 2%.
So small. Like how without going into another deficit? Like
1 to 3%.
You can't even buy the food for 30% less. How do you reduce the price by 30%? The markup isn't that much. The markup is every grocer is in volume, 100%.
So grocery stores run on a 1 to 3% margin. So all this is going to do is, again, create mayhem. First off, Chris, how are these grocery stores going to source this stuff better than the big guys? It's never going to happen. Okay. It's just impossible, you know, and I saw me see if I can find it real fast. But it was a list of, here's the price of groceries and here's what you can get for like $32. And it's like enough to feed a single person for like 10 days, like good food. So it's like, it's not like groceries are, super expensive. Yes, inflation's up, but it's like, compared to history, you can feed yourself at a pretty good price. I mean, but nonetheless, so 30%. So all it's going to do is going to drive the local bodegas. It's going to drive the local other grocery stores out of business. But how quickly are they going to sell out at 30%? Like, who's going to be able to buy this stuff? It's class warfare at its finest. It's communism at its hidden fine. Like, it's crazy, man. So, and that's not even to mention, Chris, these 5 grocery stores are going to cost $70 million to build them in the first place. So you're already going in debt $70 million. Now you're taking a 30% loss on all groceries because there's no profit there anyways. It's like, it just keeps extending. Just to give you an idea of the $70 million, that's $3,000 a square foot to build these places. You can build a Whole Foods for about $700 to $800 a square foot. So like everything, they're also overpaying by 3 to 4-fold just to have these government places built. It's just, I can go on and on with this. It's insane.
Well, it just doesn't seem like it makes too much sense. But you know what? It's a great way to buy votes. That's all I ever say. When things don't make sense and you're just like, what in the hell is going on? Well, it buys votes. And listen, like no different than Trump. Trump bought votes. He said a lot of things that have not held up. But those things are definitely what bought a lot of the votes that he got. So I just think it's a political thing. Like you just, no matter what politician it is, it doesn't matter what side they're on, or even if they're in the middle, it's all about buying votes. And I hate to reiterate this, but the end of democracy comes when the politicians find a way to buy votes, when they find a way to control the election by buying the votes. And I don't know, man, that's how I see it. The objective of socialist is to make the people dependent on the government. This is why they come after local farmers and homesteaders. Yeah, I mean, we've seen this happen in time. I mean, socialism has never worked as a standalone. Okay, you have countries like Finland, they're not socialist, but they're more social run. Norway, I'm just thinking of some of the other ones. Sweden, in all things aside, Scandinavian countries are some of the happiest people on earth. So I think there's more to it that we need to figure out. But I don't know, man. True socialism, or as you said, communism is definitely not the path.
Well, Norway is an interesting example of socialism because it was built on capitalism. They sold tons and tons of oil and gases over many, many years and created a multi-trillion-dollar basically country's fund. And they used that fund to invest in things like more oil and whatnot. And then they use that money to kind of help the citizens in a socialist way. So when you look at the size of Norway, I think it's the size of like a city in the United States. It's not able to do at scale, but the reason they're able to do that is because of their what they did with capitalism to create that fund in the first place. So it's there's always more to the story, I guess, so to say, Chris, when it comes to all of this stuff. But
yeah, I just looked at that. It says Scandinavia. I just Googled exactly what you just said. Okay, so we got a little Gemini action coming in here. I'm sure it's hallucinating a bit, but Scandinavian citizens are happy because of strong social safety nets, high social trust, and they get paid more over there, just so you know, they get paid more. High social trust and low corruption. And yes, they are capitalist, just like you just said. Plain and simple. That's actually bold. They use a system called the Nordic model, which combines free market capitalist economy with large redistributive welfare state. Interesting. I sometimes it's just like, okay, if they've got something figured out, why is it so hard to bring that here? It's just, who knows?
Yeah. But moving on from that, I mean, the other kind of top news this morning was Anthony Fauci testifying in front of Congress. So I don't know if anybody's been following this, but earlier this week, Congress released Anthony Fauci's diary that he kept during COVID, especially. And have you had a chance to look at any of that, Chris?
I have not. I've just seen the stuff that's been sent on the WTF thread.
Yeah. So, looking at this diary, he basically was writing personal, entries to himself that directly and completely contradicted what he was out there telling the public. A lot of collusion. He was having dinners with people like Jake Tapper and other CNN anchors and journalists, and having great friendly conversations with them behind the scenes, and then coming on their shows and just basically spewing BS and crap. Him bragging about how he, was the reason that New York City shut down its schools and businesses, and how this whole state of California shut down its schools. And in public, he was out there saying, "Oh, I had nothing to do with any of that." In private, he bragged about how he knew that the death rates were very, 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 very low, and then coming out the next day on public press releases saying the death toll is 10 times what he personally wrote in his own diary and personally believed, saying it was 10 times worse to try and push to the closures and everything that happened. And so the Congress said, all right, well, with all of this new knowledge, we're going to bring you in. We're going to ask you the questions. So they brought him in this morning. And surprise, surprise, he pled the fifth the entire time. So I haven't had a chance to watch it. It was just starting as What the F was starting. So I can definitely share more on that next week. But he's basically hiding behind his attorneys and pleading the fifth. Now,
I think everybody would do the same thing, though. I mean, you can't.
Is he able to plead the fifth, though? Because remember, Biden gave him a blanket pardon right before he left office for any past and future crimes. So he has a full pardon. So can he even get in trouble? Is he allowed to plead the fifth because of that? So there's still some.
Wow, I don't know. Yeah, interesting.
Questions. Yeah, behind all that, we'll see where that goes. But as of right now, it's just his personal diary with no public statement.
He's going to do what his attorneys tell him to do. I mean, you would do the same. I would do the same. If attorneys said do this, you would do that. I mean, but should he? I don't know. That's going to be figured out here pretty quickly.
Yeah, COVID was a mind-opening for a lot of people. And
the other thing I want to hit as we kind of get to the end of this show is I do want to talk a little bit about NVIDIA and OpenAI. There's a huge article right now. NVIDIA and OpenAI, two massive companies. NVIDIA much, much bigger, but they're in talks right now for up to a $250 billion package, which would provide a backstop to fund the AI infrastructure that's necessary in this country to keep pushing AI. But there's also, somebody mentioned it earlier, like, why are they stopping something about the robots? Let me try to find that. Stephen, do you have that article that you could pull up? There was something up earlier that somebody had mentioned about right here. Dex said it. Any info on why the U.S. blocked the robots and humanoids? And I don't know. So I was just putting it out there. If anyone knows anything about that block, I did not see that or hear that, which is no surprise.
Yeah, I haven't heard about it. I mean, I see this coming out of the AP this morning. Maybe it's breaking news. We haven't had a chance to see yet, but U.S. bans foreign-made humanoid robots targeting China over national security.
That could be more just the U.S.'s stance on China.
U.S. Federal Community FCC is banning imports of imports. That's probably a good thing, of new foreign-made humanoid robots and power inverters, citing national security risks and a move that targets China. Beijing quickly accused the U.S. of protectionism. The measures are likely to test relations with Beijing ahead of a planned U.S. visit. China dominates the global market for humanoids, with an estimated market of roughly 85%. I don't know if that's what this is. I'm all for it. I mean, China
sends robots over here. Who controls the programming of the robots? Could they control it from where they're at? Like, right. Control? I mean, listen, you can't discount, Terminator 2. I mean, you just can't. Remember they locked Sarah Connor up for blowing up the AI infrastructure? They're the AI data centers. There's a lot of memes going on about that. I don't know.
Yeah, I mean, they could ship these things. They could ship these things over here, flip a switch, and they all attack us. Like, who knows? I mean, that's a little conspiratorial, right? But at the end of the day, is China our friend or our foe?
More foe than friend, I think. But I mean, it's kind of the foe that we need to keep in good graces with, if you ask me. I mean, Ray Dalio, in a lot of his books and his videos, shows the U.S. and China are the two dominant forces that are going to clash. And goodness gracious, that would not be good, in my opinion. And right there, Morgan is saying what you just said. Robots are the ideal Trojan horse.
Yeah.
And if any of you know that story, you know exactly what he's talking about. 50 million illegals. The invasion has already happened and continues. That's true. You know, the open borders were not a good thing. 100%. Let's see. Then David came in and said, not 100% sure his pardon came from Biden. It has Biden's signature. I mean, a lot of truth to that. Like, right. He got a Biden pardon, but most of what they've said, Biden's pardons were done by the auto pen. So is it actually a legitimate pardon? I don't know how that ever hold up in court, but it's a good observation, David. Good observation. Yes, you're right, Chris Ash. China is definitely an enemy, but an enemy, you gotta, keep your enemies close, as they say, right? That's I think the only way to do it there. And Jordan chiming in saying the art of war, keep your friends close, but your enemies closer. Very, very important when it comes to China. And very last thing, like, isn't it just, I think when you look at our history, and there's a lot of movies on this, and I know they're remaking some of these movies, but when you look at Ukraine and Russia, I find it absolutely fascinating. Not in a good way, but just really positive that Ukraine has been able to, little old Ukraine has been able to literally hold off Russia this long and put some serious, you got to say, put a serious beating on Russia. I mean, Russia to me, like when I look at it and I look at Putin, like they're a powerhouse. I mean, they got nukes, like they got a strong military. I know it's older equipment, but still lots of people in their military. They got a really, really strong, one of the world's top militaries, period. And little old Ukraine has held them off. How many years has it been now? 2? Are we pushing 3 years?
Yeah, pushing 3, I think.
I mean, like, it's insane. I can't believe it's still going. I don't even know what they're fighting over. I mean, I remember we covered that on the show, talking about what Putin wanted from Ukraine, which is basically asking them for their freedom. So if you think about why they've been able to do this, it comes down to just sheer grit and heart, right? They're fighting for their freedom. They have purpose. Like the Ukrainian army and the Ukrainian military has purpose. And it just shows how powerful purpose is. And I don't know. I don't want to say that, they're defying all things, but they really are. At the beginning of that war, I'm like, that was kind of like, hey, Russia's going to come in and sweep them, and there's no way Ukraine is going to be able to win this thing. Now you kind of look at it and you're like, either it's going to be a forever war, like so many wars are nowadays, but you almost looks like Ukraine is doing a pretty good job. And I think it all comes down to purpose. And
so blow your mind, over 4.5 years, the war's been going on now.
4.5 years. I knew it was a long time, but I didn't know that long. It's just, wow. It's just wild, man. Just wild. But, like a lot of love it or hate it, not sitting here trying to say anything, but you got to give a lot of credit to the Ukrainian soldiers and in the fallen soldiers who, on both sides, they've got heart, man. They're really fighting for their freedom. And we've done that here in the United States of America. Hopefully we don't ever have to do it again, but you never can tell. So, and I know, Morgan, a lot of the military equipment and technology, came from us, and we wrote a lot of big checks to them, but still, you can give a country all the equipment, all the missiles and rockets and stuff and money, but if there's no heart, if there's no purpose behind that equipment, it means nothing. And Russia, I gotta believe, a lot of the Russian soldiers don't have the same purpose. They're like, why are we here? Why are we fighting? Why are we losing our children and our loved ones in a war that we don't even know why we're fighting? Right? Like, so you lack purpose on one side, you have lots of purpose, freedom on the other side. So that's the story. That's what it comes down to. And that's what I fear here in the US sometimes, is if we ever did have to get into a serious conflict, like, do we have the purpose anymore? Like we did back in World War II when we knew what we were fighting for. Hard to say. Hard to say.
I've seen videos of China, using these robot dogs and now humanoids as legitimate, like, military forces. Like, they're starting to go in, and I saw a video where it went in and like cleared a whole building on its own. Like, no,
I saw that.
It's getting weird out there very, very quickly, man. It really is.
There is.
And yeah, we'll have to get in more next week. I know we're out of time today, but we should get a little more about the data center debate. the data center debate continues to really, there's a lot coming out that a lot of the negativity and propaganda is coming out of places like China to try and get the public against these data centers. But when you look at the real data center, like water usage compared to gas or compared to golf courses, it's like not even like golf courses, but not everybody's protesting golf courses. It's an interesting discussion and debate, but it's the future. And I think it's a very important one. So we can maybe dive into that in a future week here.
Yeah. And I just think, some takeaways just from this and folks, just mark your time. A couple things. If you're in Buffalo or around Buffalo tomorrow, we've got a live event. Me and Marius are going to be doing a really cool event out back. So join us. We'll have cocktails and beverages. Steven, sorry, you're going to miss that part. But it's going to be really, really informational. We're going to talk heavily on the mathematics behind buying cars using your own banking system, paying off debt using your own banking system, and just really looking at that whole philosophy and teaching the audience how this can change their life and how this can really help them financially. But also, we're going to be doing a really cool wealth webinar today, kind of going back to the basics again, back to the dribbles and the footwork. So join us this afternoon, 1 p.m. Eastern, and you can join and register and get the link by going to chrisnaugle.com. That's chrisnaugle.com. A couple index fingers down, and you're going to see the wealth webinar. Now, just a couple things. You're going to start to see some changes in the website. We're going to revamp the website here soon. We're going to start working on that, and it's going to be a lot more user-friendly. It's just been there's so much information on the website that we're going to kind of make it a better client journey in the future. So with that being said, go out there and make a difference in your life. But one final thing, you got to want it. Back to like what we were talking about with purpose. You got to want the result. There's a lot of people in debt, that they complain about being in debt, but they don't do anything different. They're not doing any lifestyle changes. They're not trying to learn something new. They're not trying to fix the problem. We deal with these people all the time. Steven, you know that. Hundreds of people every week we talk to, they all say they want to be out of debt. They want to get rid of that pain of debt. But yet when we tell them the solution, when we show them literally the clearest path that requires them to change only one thing, they don't do it. So listen, you can only help people that want to help themselves. And I don't want to help somebody with their money that I care more about their money than they do, so there's a lot to be said about that. And I don't know, I'll leave it at that. Thanks for joining us for another episode of WTF. We will see you this afternoon for Wealth Webinar. Thanks, Steven.
Thanks, guys. See you soon.
Thanks, everybody.